This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. If you've read my book or watched any of my videos related to MACD, you know I spend a significant amount of time looking at the zero line and the importance of the zero line and signals at or near the signal line. I thought it would be important to spend a few minutes talking about when you're not near the zero line, when you're kind of stretched away either above or below. And more importantly, I think understanding that really the true essence of MACD and the fact that it is an oscillator. And so in terms of like being an overbought, oversold oscillator. So I'm going to go into the example I'm going to use today, APD. I'm going to start with the weekly chart. And, the goal today is to sort of explain that we've got a couple of key signals that we're looking for. Number one are reversals at this. And so what I've got here actually on the weekly chart is this red line going across. That is the zero line. And so I'm constantly looking for signals at or near this line in terms of pullbacks, corrections, to the upside or to the downside if you're pulling back after in a trending move to the upside. So that is one aspect. Another is just a simple pullback, which would be, the pinch play. Again, these signals are in my book, Invest Like a Pro. But one of the things that I think might be misunderstood or maybe not explained very often by the average person who looks at MACD is the fact that this MACD line in relation to the zero line is an overbought, oversold oscillator. And I think the most confusing part about this is the fact that the scale on the right is different for every stock or market because it's in relation to it's the price of that instrument. And so we don't have like a standard plus 100, minus 100 reading to show that it's overbought, oversold. The original creator of MACD was Gerald Appel, and in his original work on this subject, he explains, and I think he uses the, I'm trying to remember now, I think it was the S&P was the chart that he was using, but he went back, and if you've noticed what I've done now, I'm looking back over time, and I can even go back a really long way, but let's just, for the sake of keeping the price chart, make the chart looking a little normal. Notice what happens when the MACD lines start to get stretched away from the zero level in either direction. And the other thing I think you ought to be looking at is the fact that for each market, it is going to be a little bit different, but you're going to have some kind of an area for each stock that I would consider to be like a historical norm of overbought or oversold on a MACD basis. And so you want to know your stock, any stock you're looking at or you frequently trade or looking for ideas, go back and get as much history as you can and see if you can identify where the historical levels are of where MACD gets overbought and where it gets oversold. Those are sort of the zones where you want to be looking for divergences to kick in. And so I don't just take a divergence just anytime it happens. If there's a divergence near the zero line, I almost always will ignore it. I'm really only looking for divergences when they're stretched away from the zero line in either direction. And as I've said in other videos, go back and look at a few, but the fact of the matter is I don't actually like seeing divergence in a single time frame. One thing you might want to look for is if a weekly chart is getting into its overbought zone, go down to the daily chart and see if you can find a divergent signal based on those extremes. So if I were to switch this to a daily, we can see that the daily chart has its own levels of extremes as well. And you want to monitor where these overbought and oversold levels are, where if MACD gets overbought or oversold, you want to be on the lookout for signs of a reversal. Now, I wanted to use APD as my example today, Air Products and Chemicals, simply because, I mean, this is I mean, it's not a tech stock. We're not talking about Apple and Microsoft. If you were to go and look at the MACD in this way from Apple and Microsoft, you will see one of the most wild movements that has taken place in the history of these stocks. And, it's such an extreme that it's almost hard to look at it in a normal fashion. So I wanted to just make sure you understood that even when you get these huge moves, massive moves outside of the range, like blatantly outside of the range, they're still relevant. I think, you want to know what the historical norm is, and odds are this stock is going to get back inside that historical norm, like what's happened here. Now, again, if we were to go and look at something like Microsoft, it's outside the historical norm. It might take a little bit more time to get back inside that range. But you want to know where the historical levels are. And, if a stock makes a significant move in price where it's going from, a $10 or $15 stock up to $100, $200, $300, $400, $500 stock, yeah, the historical norm is going to change somewhat. But you should be able to make those adjustments over time. And, if I look at this stock, if you notice, right around the +3, -3, is the, important levels to keep an eye on, both on a weekly and on a daily for APD. The other thing that I would suggest to you is that sometimes when we get real extreme drops, like a massive drop to the downside, you won't always show a divergence signal at the bottom like this. It's just going to be a deep oversold reading, and then it's going to reverse. And what I like to do is actually just keep an eye out for long-term support levels. And this stock actually was one that I highlighted right off this low. It was something that I do in my Monday review. I highlight stocks, and literally off of this bottom, I highlighted this stock because it was coming. It was obviously deeply oversold. It was showing good performance relative to the market. The relative strength line was actually going up, but it was coming into some major price support as well. And so, if you can combine these things, I think MACD can be very, very useful. Let's zero in on what's taken place here recently. And if you notice, you had a really extreme reading here as price went to new highs. And I don't have a problem with that. If it's making an extreme and we don't show any signs of divergence, I mean, I'm not necessarily interested in buying when it gets to this extreme. I'd rather wait for some kind of a pullback. But if you notice what happened, it pulled back and then it did make a new high right here. And MACD diverged pretty dramatically. So we're making a higher high in price, and the MACD is diverging from a significant level, obviously in an extreme area of overbought, and then we get the divergence signal. This is more of what I would be attracted to if I'm looking to play a divergence pattern. I'd rather find one that's in a historical extreme level and then go and look for the divergence to take place. If you can find a historical extreme on a weekly chart, go down to a daily chart and see it's at an historical extreme based on the daily, and then look for the divergence to take place, I believe you're going to improve your win rate on your divergence setup. So these are aggressive reversal plays. Sometimes they're just reversions to the mean plays. But there are times where you're hitting some type of a historical level where, you can expect a lot more than just a simple pullback. So the stock has actually moved back inside this range again. And I think, you want to be on the lookout for, again, key price support, long-term price support, and then look for where a stock gets oversold in the lower end of the range and shows signs of divergence outside of this historical norm. I think if you do that, you're gonna be on the lookout. I always talk about buy zones. You want to be smart. You want to be thinking about where are the key levels to be thinking about being a buyer, and where are the key levels to think about being a seller. It's not always about being exactly right. It's just if you're thinking the right way. So at this point now on this daily chart, you should be thinking about being a buyer as opposed to being a seller. Now, it doesn't mean that it's timely. It doesn't mean that it's a buy this second, but you should be flipping the switch and starting to look for buy divergences now up against price support if it can play out that way. So, I hope this is helpful in terms of getting you to understand, again, it's unique in terms of the way you want to look at this long-term pattern of overbought, oversold for MACD. It's not really talked about all that often, but I can tell you for a fact it happens, and it's a little bit different for each stock. So you have to go back and look at each one of your stocks and figure out, where their levels historically are overbought and oversold. Hit that subscribe button if you want to see more material like this, and give me a thumbs up as well. Thank you.